All right, folks, we're going to get going. No echo. Just please confirm that after what we went through today, but I'm sure it's fine. Appreciate everybody coming on. We had quite a few people, I think almost 3,000 people today in spite of the echo. So, and I have to tell you, Microsoft has screwed up this entire day. I came in here and now I'm getting TradeStation is crashing on the new update. So I walked in, I had to reboot and then reset up everything again. So it's a Microsoft disruption kind of day. So thanks for being patient. Should be able to get through tonight fairly good, fairly efficiently since we spent so much time earlier today. And it was awesome having Dr. Baker on. He's an amazing guy. I just want to say that I've got some interesting things that we're going to be working on. I mentioned this before. We were going to do a Twitter space. I'm changing up everything. And what we're going to do with Dr. Baker and Phil Zweig and myself is we're going to make a recording, kind of edit it up, make it sound pretty, because there's some pretty epic conversations that need to be happening. And I just don't want it to be a random Twitter space. There's a bunch of Twitter spaces out there. They're just random talk, and and you stay on these things for hours. I think the one that Jim and I did before was good. So let's get into tonight's video. So what did Paul do? Exactly what I've been talking about. He raised by 25 bips. The thing that I thought was interesting, and I talked about this when we were live today, is that we did not. He started with the whole banking crisis. He led up front. And I remember saying back on Sunday and Monday, said he's got to make sure this is number one. And he did. I'm giving him a thumbs up. I know the market kind of crapped out as it traded on throughout the session. But I think that was just, I don't know, maybe just disappointment. I actually think I looked at some things today, and after the stream that I did earlier, and I'll cover them tonight. But we're just in a mess here, folks. There's no uptrend, there's no downtrend, there's no bullish, there's no nothing. And I would just tell you, it's really dragging on. I'm going to kind of bring in some perspective tonight, just how terrible things really are here. And so, anyway, we'll continue to walk down the path. The market is leading us. So, but I really don't see anything that Paul said. I didn't get a chance to listen to the Q&A. I usually do. I had, after I got off the live stream, just been crazy busy. I got back over here to the studio just in time to find out that I had to reboot everything. So thanks again for your patience. Yeah, he's not pivoting. I've been telling you that. The Fed is not going to pivot. Now, he did say something. Let's talk about that for a minute. He did say something today that I thought was interesting. I heard this little blip in my ear, and that it looked like the market had heard the same thing, that it sounded like maybe we're going to need to go forward with some stuff and do some more rate increases. But it sounded like he was saying maybe this was it. And we'll see. I think that dialogue will come around. There's going to be by the way, now they're out of the quiet time that the Fed meeting's over, right? Every one of the talking heads, every president from every Fed bank is going to be out there talking, and they'll send Bullard out there. He's the hit man to drive some narrative that they want to drive. And I'm sure that they're going to stay on this banking situation. And like I said, basically Powell said what I've been telling you folks here, is that this banking situation is very isolated. It's not broad-based. And I know folks are talking about, looking at flows in and out of banks. You could have been doing that for weeks. And, that's sort of like, I always say it's like a dog chasing a car. What would he do if he caught it? And it's one of those scenarios where it could be interesting. Maybe you would detect something. But I mentioned this earlier, is that this is one of these things that you do in life that's just a distraction from what you should be paying attention to. And, for all practical purposes, I'm a trend follower, Elliott guy, macro economics, and, I follow a lot of this stuff, and I try to bring in the elements I think that are important and try to block out things that aren't. And as you folks know, and when I see big things on charts, I ask questions like, if we think there's a big movement going to happen to the upside, what would make that fundamentally happen? And boy, I'm going to tell you right now, this is like this can be like watching paint dry. And we're coming into where are we at here? We've got another week to go, roughly 8 days, I think, technically, in this month. And then we're going to be into April, and then we show up at May. And I talked about, I think I did a video some time ago, said, will March and April be like they usually are, which is usually a positive month. So I'm going to save all the longer term stuff until we get into Sunday night's video. So tonight we'll just kind of recap what we're doing, get some setups for Thursday's trading, talk about a few things there, and then we'll get out of here. And tomorrow night on the channel, I will cover, what we look like toward the end of the week and what the implications are. But as it looks right now, I got a little bit of a bid in the ES. I'll show you in a minute. It looks like the algos are suggesting a little more recovery from that late couple hours, last 2 hours sell-off, really. The last hour was pretty brutal. There was just heavy sellers coming in from every angle. All right, let's go ahead and let's go through the Wavetech database and get that set up. It's going to take just a second extra, so let's go ahead and transition over there. All right, so yeah, you guys yell at me if you hear any echoes. I did some time this afternoon fixing everything, so everything should be good. So here we are, 17.04%. We basically had a rotation, 139 buys, 192 sells, not going anywhere at the moment, just kind of rotating here. We're at 17%. So what does that mean? That almost 8.5 out of 10 symbols have no position, meaning Bob's not bullish, Bob's not bearish. If anything, the downside is a little bit more likely at the moment. Maybe, like I said earlier, maybe we end up in a 38.50, 40.50 range. We got rejected again around this 40.76. It's amazing sellers that show up there. All right, this is the one screen I didn't fix, so there's no echo anymore. It should be cleaned up. anyway, so just going on, we're really just looking at this. The database is nowhere's land. It's basically blowing out. 17% of the stocks is nothing good. Should be no echo. Just confirm that, but it should be fine now. But the point of just going through the database tonight is really we're just not anywhere. So let's go ahead and get into the technicals. All right, so we'll come up here and we'll just cover the hourly chart as always. It's interesting. It was fascinating. I wish I could have focused just on what was going on that 1 minute chart today. There were some amazing signals that came out of the algos today. It was really just catching pretty much every turn. And here's, as we look at the algos now here on the hourly looks like, you know the answer I'm going to give you already is as we should trade up into the London Open. I don't have any feel for after that other than we'll look at what the market grid is telling us on the dailies here in just a minute. So we look at the targets for these three algos here are 40.17, 36.48. I suspect we do get a decent retracement, at least up into this first target here at 40.17.25. That's probably where we end up heading back toward that handle there, and then probably a reaction off of that. But it looks like we should stay positive here for the next couple hours, and it'll take getting above the 10-hour moving average. So if you're following the just an SMA 10 here, it's at 39.98, and it is declining right now at about 8 handles per hour. So that'll be 90 and then 80, 85. That would be where it looks like it's going to turn. If you look at the algos on PPM1, it's definitely telling you that is going to be where we should start to penetrate and run back up towards the 2140 values here in this pattern. Let's take a look at the daily pattern here. Daily is interesting, and I'll talk about this a bit. I went through at the end of the stream. If you hung on to the end today, if you were there, we got an outside reversal bar, and this happened on NASDAQ. This happened on the S&P, and there's a 3-day trade I always talk about, but I'm going to tell you that I think this is going to be a really short trade. I'm not sure we're going to close lower tomorrow, but I'll go ahead and talk about it just a little bit. The bar yesterday made a higher high and a lower low than the previous session, and it did it at a top of a sequence. And if we start to let me just do a quick bar count. And it's 8 bars, which was kind of part of a 5-3 sequence. What we should do is come back and test the 10-period moving average, which we're already doing at 39.57. And there's that range again, 39.50 to 40.50 is the range. And we blipped down to 38.50 there for a minute last week. But it's going to be interesting because I talked to you a fair amount if you're hanging around talking about this 1, 2, 3 pattern. So we could trade back down toward this value here around that 39.50. That would set up the possibility of a bottom of a 2 or a B wave, and then we would see a wave to the upside again. I still think on general bias, there's still a bias to the upside. I'm going to bring up the weekly chart here next, though. But first, before I do that, let me bring up the market grid here real quick, and just so we can get a feel for that, I want to show you the grid, and we'll go to ES and bring that up for you. So we'll look here, and this is a weekly. Let me get to the daily grid here. We're looking at right now R2 is 14, R1 is 39.91, S1 39.49. We've only had a 70.81, very narrow range so far overnight. So look for S1, R2, which would be probably a classic. That would be 39.49, basically 39.50, with the possibility of trading up to R2. And if we trade down first, maybe we finish the day on a higher note. We'll see how this thing sets up, but that's going to be your expected range for today. Yeah, so basically, like I said, we're really in a sideways range. I always go with our database, especially in intermediate. So we have a lot of symbols in there. We don't have any positions on the indices right now, bullish or bearish. We're not bullish or bearish, just in a sideways mode. And so I want to get that right there. I do want to show you something. And if we can go back a ways here on the daily chart. And I've shown you this before. It actually, let me go weekly here. And I think this is probably one of the more interesting charts here. We can go all the way back to May of last year, and we're basically in the same range. We've been, the midpoint of this range is 39.14. Last time I measured it. So we're looking at exactly, let's see, hopefully should be no echo here as well. But we're looking at just a giant trading range for almost a year. I know everybody's bullish, bearish, all that stuff. You look at the range, I've shown you these box formations. We're just, the midpoint is really it's kind of interesting because this is a weekly chart that I have up here right now. And if we look at the values here, right now the 200 week is at 38.22, the 40 week 39.52. It's coming right through the middle. And like I said, the midpoint of this range is 39.14. So we've just been gyrating a little bit above and below. We printed down, I think, down to 35.02 is a low last October. And we just continue in this choppy range. And there's no trends here, folks. There's no uptrend. There's no downtrend. The only thing that I have going is that I look a lot beyond the indexes. And what I'm really seeing here is I look at the database. Our short term is just confirming there's no trend. Certainly no, with 17% buys is nothing to look at all. And then we go to intermediate. There are a fair amount of intermediate trades, about 53%, which is half of the database. So 1 out of 2 symbols actually have a positive slope or a probability for higher prices, and the rest are out of the water. So there's something I think I can show you. Let me just see, but we're going to flop. This will be related to the S&P, but let's just see if I think I can bring this up very quickly for you. Yeah. So I want to show you something here real quick on this. And this is the S&P 500, just to show you this is exactly how this database comes out here. And what I'm going to show you is that right now we're 49% in cash on, these are just the 500 stocks in the S&P. We have 50.62 invested, and that is it. And it's down 295 on the year. There's just nothing there. Last year did a little better where we traded in this portfolio. We trade every single stock in the S&P 500, and it's all 500 stocks. So what you're seeing here is just all these stocks. We do open positions. You can actually see exactly how many are long when we're looking at the S&P, and the range is. Yeah, I get a little impatient. It's got to bring up a lot of stocks, but here we go. So it shows you every positive, negative of every holding that we have. And there's it's just a mix. Even on this level, there's some winners, some losers, there's some big winners, but this is what it looks like from a standpoint of when you get out to the portfolio level. Okay, so just coming back here to the index, when you look at what's going on, we're basically, we only hold 189 symbols of the 500 right now. So there's no real bullish bias here. It's just 50-50. And, so when I look at things and we look at a lot of our portfolios, we still have a fair amount of portfolios between 20 and 40% in cash. So we're still somewhat in a protective mode. We're not fully invested, and it makes sense. And it goes to this pattern that I wanted to show you tonight, is that we're really sideways for a year. We blipped a little bit above and a little bit below, but we're right down the middle. We're sitting here right again in this 39 handle. So and this is interesting, having the weekly chart up here, is what we're seeing from that standpoint is the algos are flat. They're not going up or down. And I thought, this is crazy, because what this tells us is we've got weeks and weeks of this to go through. So, I have no words. I want some volatility. I actually don't care if it goes up or down. I'm glad for it to go either way. But and the reality is, it looks like sideways is what the answer is going to be. And as I said, with the banking situation that's going on, there's uncertainty around that. There's uncertainty around the economy. Everybody talking about recession, no recession. The Fed obviously isn't worried about recession. They like I've said before, they want you unemployed. They can't figure out how to get you unemployed. And it's interesting the way that I think there's something, not too much of a rant here, but I will go here for a second. But I think there's so much of a shift in how people work now, not just working from home, but how work habits have changed. Everything has morphed into a much different place than where we've been ever in the history or in the infrastructure of employment in the history of the world, okay, forever. So we've never been in a place like this where people have side hustles, doing all kinds of things, working 2 or 3 jobs or running multiple little small businesses to make money. This is a very, very unique business. And the fact that these stats, not business, but economy that we're in. I've been around a long time, watched this thing evolve, never seen anything like this. And I can see sustainability. I did go on a little rant earlier today talking about how I believe the whole AI world we're coming into a new era of potential multiples of productivity. The one factor that you need to pay the closest attention to when you're looking at the economy is productivity. So if it's possible that all of this generative AI stuff is going to really make people more efficient, more whatever, and give the ability for them to multiply their productivity, then we could see productivity gains like never before in history. So, maybe there's a robot that runs everything and we all live on universal income, and, everybody makes $1 million a year. I'm joking, of course. But what I'm saying is there's going to be a lot that's going to be going on going forward in this. Let's go ahead and get into the rest of this stuff and take a look at NASDAQ. It had a pretty crazy day as well. So the NASDAQ is looking at right now. Let me expand the scale just a little bit. You'll see this big outside day. I just want to check that. I said that we got an outside day. The low is 12. The day before yesterday's low was 12,867. And we printed 12,678. So we did get an outside bar. I said I don't like that this is the daily. The algos are suggesting there's still more positivity on the NASDAQ. So I would tell you right now that I don't have high expectations for this 3-day trade that I described earlier. That means that maybe it'll work really well. But we have to close lower to confirm this move to the downside, and just the upward slope of the moving averages and everything. Yesterday was just a day of volatility. I talked a fair amount about volatility and normalization of this volatility, and so as wild a day as it was in the NASDAQ, it really is just kind of back in its range again. And looking at some values here. Let me give you a couple of values here from this is a daily. Right now, R1 12,921, S1 12,813. We've been so far down to 733. So let me get that number here. S2 750, 12,752. So we've already printed S2. Look for R1 is 12,921, R2 12,937. So I think we stay within this box formation here on the NASDAQ. If we can take it down, this is the problem with the 3-day trade working. Because of where the market grid is, if we close below the market grid tomorrow, the STX, we're going to have an STX buy coming in to Friday's market activity. So it's going to be interesting. It looks like even if we did get a lower close, it'll probably get stopped out on that trade the next day. So that looks like to me that this trade's probably not going to work. There's still a decent uptrend. Then I mentioned this in the last couple of nights, is that the NASDAQ has much a higher level of angle of attack and upward slope than the other markets right now. So it's still leading the other markets at S&P and the Russell at this time. All right, last night when we covered the Russell, I mentioned to you that we were over the 10, but that downward slope of the 10 was pretty drastic. So what we're seeing here right now is the algos are suggesting the next, probably tomorrow, we should be able to get through the 10-period moving average. Right now, that number is 1762. Last trade here, 1749. And then there's a pivot right here at 1781.60, and that's going to be the number you're going to watch on the Russell. We print above that, then we'll probably come back in the range and ultimately see the 10-period moving average move up. As I talked about, when you get these, I'm just going to draw in a couple of things. I haven't used my drawing pen tonight, so I will do that. But when we take a look at some of this stuff, when we get these patterns like we've got here, we're getting another one here. They tend to be the low, and whenever you see these kind of start to zigzag and you get these zigzag patterns, I call this pattern over here. I've got lots of funny names. If you've been in the live room, you know. But this pattern right here, where the market grid, I call this where the circle is the caterpillar, and the caterpillars usually end up being a bottom of a sequence, and we saw that rise up. And now we're seeing this pattern here that looks like we should come back into this range, head back toward, this is daily, so back toward the 200-day moving average, and the 21 is there, so 1830. As I said, that number is 1781, 1830 would be where we'd probably go to in this pattern. Okay, so we'll cover the treasuries next. I'm going to start with the 2-year. And it's interesting because that pattern I was just telling you about is set up here. You're getting that zigzag pattern here. And it looks like the algos want to flatten out here. We could see the treasuries move up. The 21 period moving average, if you look down where my cursor is here, that is the PPM2. It's still suggesting that this 21 is going to roll over here. I've got to do some drawing here just to make sure we're all focused on the same thing here. But what should happen here is this average is going to round out and these are going to come down into this pattern. So I'm trying to draw this out here. And what happens over at this level is that over here we get where the moving averages start to crisscross, and then the next phase from that typically is going to be where we're going to get some kind of 1, 2, 3 pattern, maybe come back in here. Whether it's dramatic or not, we'll see what happens here. Let me get rid of some of this stuff here. Yeah, so this down, we get it here, and then we probably get this little pattern here that comes back into these moving averages, which puts us back around 408, maybe 416 on the 2-year. Let's take a look at let's go to the 10-year. And I thought this was interesting when I looked at this earlier. This is the daily. I was talking about these Fibonacci targets. Look at this Fibonacci targets here, these green dots up here. High target 1, 412, 441, and 459. Those are crazy numbers. I try not to discount when I see these patterns. We did see patterns over here. Let me just draw this in from the standpoint so we can get some perspective. And once again, we got these targets here. A lot of times we'll get these targets here, and I call them islands. And what we're seeing here right now, as far as this is the daily, we're seeing the way that the patterns are setting up here is that the algos, I'm just drawing them in here, are projected several days out, maybe to cross this second derivative. During this time, what you end up getting on from a yield perspective, you probably move back toward the 40, which is 371, and the possibility we'll call it 380. There's going to be a lot of resistance for yields to rise above that initially. And just looking at what I was showing you just a minute ago on the 2-year, is that suggests the inversion is going to come back in a big way. And I think what is likely to happen from the standpoint of the way the markets are configured, that we start to get basically we start to normalize all these rates. The spike that we saw out of SBV and all of a sudden everything switched around really quickly. This is going to go back and normalize. And like I showed you, there's possibility of 408, 416 on the 2-year. This is looking at 380. So everything wants to come back into these values or in the yield. And it looks like that. And that would be a sign, by the way, if that happens, that we're seeing stability in the banks. And I know, like I said, and Paul said it, I'll say it, I've been saying it, is that this bank situation is highly isolated. And I kind of got into talking to you earlier today, is that in case you didn't know, most of the deposits in banks have never been insured. The bulk of deposits on the banks are not insured. It doesn't work that way. And I think it's ridiculous that Yellen and this we'll just call them the woke crowd running the government right now is, trying to appease everyone, and we're going to make sure everybody's guaranteed. You can't do that. Okay. You can, I guess you could print all the money. I would call that, if they actually tried to do that, the biggest Ponzi scheme ever on society or on humanity. that there's ever been if they tried to guarantee that. It just doesn't work that way. Our job as investors, our job as whatever we're doing with our money, is to understand what we're doing with it and understand the risk that exists during that period of time. So, pay attention, do your due diligence, understand what you're getting involved in the best you can, and make the best decisions you can. That's the way I've been doing for 40 years, and I've been through crazy stuff, crash of 87.com. I've been through it all, been through Paul Volcker raising rates. I still would argue I get the percentage game, but I'm telling you, when we saw rates the skyrocket, imagine if you had rates right now at 22%, and the discount window was 18% with a 4% surcharge. If you showed up to get money too often, they'd penalize you for coming to the window. So that's a subject for another time. So let's move on. Let's go ahead and get into crude, gold, and Bitcoin, and we'll be done for tonight. As I've been talking about, we're continuing to see crude oil move up. We did get to that 10-period moving average. Looks like to me in the next couple sessions we'll get above that, start to move back towards 74, 76 level on crude. It's been these little bottoms here that when they set up like this and you see the algos moving up, those of you that have the indicators, you'll see these patterns. I mean, they're telling you what's going to happen. And even before I had the algos on here, this kind of setup, this has just always been a bullish setup. And I wish I could draw better with the mouse. I need to get a pen to draw with, because then I could exactly draw on this page what these moving averages look at. And I would tell you this, folks. I've used the 10, 21, and 40 period moving averages since around 1984, and I understand every movement of them. And that's as important. Trying to find the right moving average that tells you where the tops were. Look at bounce off the 22-day or the 40-day. Just that's not as important as understanding the configurations and everything. And I've spent my entire life just studying moving averages, the internal movements within the first, second derivative, looking at rate of changes and percent changes, and trying to figure out when they're a trend line. That's been my whole career. It has done really well. I'm sitting here. Trust me, you don't stay in this business doing the stuff I do for 40 years and being wrong. Just know that, okay? That's not how it works. And so my point of this is that when you see these patterns, especially even if you just come here to the channel and see these patterns, these are bottoming patterns. Sometimes they lead to something bigger, but they are bottoming patterns, and usually see further move back into the pattern. And crude oil has been the same as the S&P. Everything's been basically the same in that we have this giant trading range. And we dipped down recently down into the 60 handle, right? We got down here at the low, we got down to 64. I remember talking about these fib targets down here, which was, all the way down at 66, 63, 78. These are silly. The market will never get down there. Well, we did. And so now we don't have any upward fibs. We don't have any targets of any sort, but it does look like we should trade back into the 21 and the 40-day moving averages. I'll go and, like I said, I'm going to hold off unless something big happens on Thursday. I don't see that, but I'll hold off until Sunday night. We'll go through the typical longer term viewpoint. Typically on Sunday night, I'll look at the weekly, maybe monthly charts. I'm going to do a little more setup for the week ahead. And so far this week ahead that we looked at coming in Sunday is acting as expected, we'll say. All right, so we'll go to gold. Gold bounced back. We got moved down yesterday, and we've kind of gapped up here. It looks we're at up 22 at 1971. One of the things I was talking about last night is if we got an opportunity to buy against this 10-day moving average, that would be golden. Still looks to me that we're going to come down and test this average again. So look for a move where you have to remember that the 10-period moving average right now is going up $13 a day. So tomorrow it's going to be 19.49, and we're trading right now at 7.71. So that's going to be that number to watch. And we'll see. The algos are suggesting that we're going to lose some momentum, but the overall trend is still up. And like I said, I'll just hang out until Sunday night for any longer term analysis. This is really all that counts as we come into tomorrow. So we'll cover Bitcoin. Bitcoin finally got hit pretty good yesterday. Outside reversal there as well. Same scenario like with the NASDAQ, with the S&P. We closed lower on this next day bar. Then we could see 2 or 3 more days down. And this 21-period moving average, I was telling you just in the last couple of days, we're seeing the algos were suggesting we're going to turn down. And we finally everything got hit. Maybe Bitcoin's been a little, just been climbing the wall. I wouldn't call it a wall of worry, but it's just been in this huge uptrend. And I think it's tapped out here right now, and we're probably going to see it come into this 21-period moving average, which is still expanding and is expected to continue to move higher. And it's going up right now at about $200 per day. So it's probably going to end up, the potential is if we bounce around a couple more days, you're probably going to look at dropping back into 25.3, maybe 24.8 range on the downside. And this is off the daily. If we look at the weekly, it's been kind of interesting here as we traded all the way up to the 200-week average. And it's crazy because the market grid just, it's interesting. I don't know if this is a data issue or what it is. I'm actually I'm gonna flop over here to TradeStation for a minute here. I just want to verify something. Let me go to weekly. Yeah, so for some reason, Market Grid isn't updating on TradingView. I'm going to research that. But we're looking at the upper end of the grid right now. The high has been 28,896. R2 was 29,318. 28,287 was R1. S1 is 26,445. Low 26,678. So we're in the range here. And like I said, everything looks like it's even trying to roll over here. Go back to TradingView here for a second. Everything's trying to roll back in. You see the algo's turning down. So we're going to test that 10-week moving average, which can be around that value I talked about on the 21-day moving average as well. So that we should come into that range right now. That's 23.8. I was talking about 25.5, around that range. Okay, folks, minimum echoes. Good show tonight. Appreciate everybody hanging out. I would just tell you to look for lots of volatility here as we come into tomorrow. I think the S&P has a good chance at trading up to R2, which was around that 40.14 handle. If you were around in a live session today, we traded right around I think it was the S2 level, which was 40.17, and we finally busted that. And then all of a sudden, we're trading down into our S3 levels, down at 85 and less. I think we printed all the way down to 69. So we saw some really heavy duty selling coming in there on the futures. But look for the volatility, and this is something I want to point out. I've been stuck in this loop from the day session I did today and continuing. Is watch this when volatility kicks up and you get these big ranges. It takes multiple days, so expect the markets to rally a little further intraday than you think intra-session, and sell off a little bit more. So I set up the values there pretty good with the S&P. So go back and look at that section. So anyway, folks, I really appreciate everybody hanging out today. I hope you enjoyed having Jim Baker around. I sure did. And, I think that I'm looking forward to this thing that he and Phil and I are going to do. So we will put that together. And thanks, Shaytown, Tony, and folks on the indicators. Listen, I'm going to be doing some mastermind classes. I have just been running around. I am going to be out of the country again coming next month, so there's going to be a little bit of downtime. So I'll announce that as I get closer, but I knew I have plans on, I have to be out of the country, I think, for 5 or 6 days. And so I'll be doing that. And then we'll be back in the groove and getting everything going. So the indicators are important, folks. It'll fill the gap when I'm not around once you learn how to use them. And the other thing that we probably need to really work on is getting a good community going on our Discord. Discord's kind of a dead, floating face down right now in the water. And I've tried to find a couple folks to maybe try to help me run that thing when I'm not around, but we'll figure it out. There's a lot to do, and I've got a lot on my plate. So anyway, folks, thanks for watching. Appreciate it. Have a good day trading tomorrow. We'll see you tomorrow night, same time, same station. Hopefully I'll be on time. Won't have any further market or crashes of windows. And so talk to you then. Have a great evening. Thank you, Trader SLA. I really appreciate that. Yeah, Bo, I saw your comment earlier. You spend more time with me than your family. Pretty funny. Thanks, man. Oh yeah, hit that like button. Hey, notice that S&P futures up 14 handles now. Should trade up into London. See you guys tomorrow night.